Start.
Hello children, welcome back to today's class. Today we are going to take up the next basic concept, that is net factor income from abroad, NFIA. Okay, so when we say net factor income from abroad, what does it mean? See, it refers to the difference between factor income received from the rest of the world and the factor income paid to the rest of the world. Yes, say for example, we have some of our normal residents. The normal residents of India, few of them may be working outside, of course, for less than 1 year. Alright, so they are earning their factor income. Alright, and these factor income will be coming to our country. Alright, similarly, there are some non-residents, okay, they are not Indian residents, they are working in India, alright, and their stay is for less than 1 year. So whatever factor income they earn within India now, that will go to rest of the world or to abroad. Alright, so we see that through this something we have to pay to abroad. Alright, so the difference of what we receive, income received from abroad and income paid abroad, the difference of this gives us NFIA. Alright, so what is NFIA? It is income received from abroad minus income paid abroad. So we take the difference. Now, coming to the question, we are saying that it is income received by the normal residents. Alright, so what are the components of this factor income? We have three components of factor income in NFIA. So NFIA comprises of three factor income. The first one is compensation of employees. In short, what we call as COE. So what are the compensation of employees? The employees might get compensated in form of wages or in form of salaries. Okay, so those normal residents of India who are working outside as employees, maybe they are earning wages, they are earning salaries, okay, and this is coming back to India. Next is, next component of NFI is income from property and entrepreneurship. These are various types of income in form of rent, okay, then interest and dividend. Alright, rent, what is the remuneration of rent comes from land. Alright, then interest in case of capital, and then what is the income or what is the remuneration given to the entrepreneurs? We know it is profit, right? We know that the remuneration paid to the entrepreneur is profit. But then here we are not writing profit, we are taking dividend. Alright, why? Because when we are talking of profit, profit again comprises of three parts. Alright, first thing is dividend. The dividend, that is the distributed profit. Alright, as the entrepreneur takes some, have got some shareholders, he has to give the shareholders their part of the profit. So this is dividend is distributed profit plus, okay, some part of the profit, out of the profit made by the entrepreneur, something has to be paid to the government. Alright, the profit tax, which is called the corporate tax. Alright, so profit, corporate tax, and after distributing the profit to the shareholders, after giving the corporate tax, alright, something is left with the entrepreneur, and that is his retained earning. Other name for retained earning is undistributed profit. Other name for dividend is distributed profit. Okay, so the third component of profit is retained earnings. Alright, now see, when we are talking of income from property and entrepreneurship, we take it is rent, interest and dividend. Alright, that means some of our normal residents, they are the shareholders, alright, and they are getting the distributed profit that is added. And maybe some of our normal residents also earn the factor income in form of retained earnings. Alright, retained earnings, it's a part of profit. Okay, so these are the three components of NFIA. So NFIA can come in form of wages and salary as COE. NFIA comes in form of rent, interest and dividend. This is the income from property and entrepreneurship. And NFIA also comes in form, the factor income from abroad also comes in form of retained earnings. Alright, so these are the various forms in which the factor income comes from abroad. Similarly, these are the various factors in which, these are the various factor incomes in the form of which factor income goes to the rest of the world. Okay, so we take plus and minus, this is added, what is coming in? We will take minus the COE plus rent, interest and dividend, alright, plus retained earnings, alright, whatever is going to the rest of the world. So we will take a difference of this, what we receive and what we pay.